Good morning, everyone. Happy Monday to you. 11 a.m. here in the Baltics, 10 a.m. in Germany, France, Spain, oddly, and 9 a.m. in the UK. Hope everybody had a great weekend. Only a couple streams for me this week. Actually, my godson, I promised him I'd take him on a trip, a European getaway for a couple days, and while there's still warm weather, we're going to go to Italy. So just for a couple days at the end of the week, but nonetheless gets in the way of the everyday of the streams. But I'm here now, and I got some info on the monetary base and Bitcoin. So let's go through it. This is my headline sort of exhibit. Put a lot of work into, a lot of research into. I'll do a report, kind of a release later today. Should be out later today. Tomorrow latest, but later today, I believe. The data is finally all in for second quarter. I know this is a lagging indicator. It's kind of annoying that it is, but it is. We've had this very jerky, jagged fall in the money supply since December 2021. All right, December 2021 was the peak all around the world in the money print, and it's fallen down since then. What we are interestingly in now is a period of an upswing of this jerkiness. All right, so you see we had a jerky up move there at the end of 2023, September 2024, and then down again. And now by June 2025, it's up again, $27 trillion globally. All right. This is primarily driven by other central banks around the world, not the United States. Okay, as you can tell, and you can see here, the United States has been dropping their balance sheet, which includes the monetary base. Most of the time, the United States has had pretty consistently high interest rates. Most of the time, that means that higher interest rates means a declining or a lower monetary base. It's not always one for one. Important to keep in mind. It's things happen on the margin, right? So if the Federal Reserve, for example, if they keep broadcasting that they'll let bonds run off their balance sheet and the printed money, whether it's digital or physical on the liability side of the balance sheet, then will fall, it falls. And they can, have rates stay the same or maybe move them up a little bit, or they can just be the same. It's not always a one-to-one ratio of that, say, a movement in their target interest rate versus how the monetary base moves. But it's generally going to follow the opposite path, right? Meaning, so if they say they're going to drop interest rates, that typically means they're going to print money, an increase in the monetary base. Okay, so it's kind of been my goal for people that watch me throughout the years just to understand this is what the printing press is. And I think it's more important than the interest rate itself. Because here you actually see the money supply. You actually see how much money is sloshing around in the global economy. Base money is the core of the system. It is the most analogous money supply to Bitcoin. There's nothing more core in the fiat financial system than this money supply. You can't reduce this money supply into some further, core element. This is the core of the fiat financial system, and it is a liability. All right, like all liabilities in like all money in fiduciary systems, it is a liability. Okay. So when you put money into a bank account, that's not in this money supply. Those are in broad money supplies, but those are deposits. They are liabilities for your bank. They're an asset for you, but they're a liability for the bank. And that's how we count up money. We count up the liabilities. That's how it works. So you'll notice that if we topped out at 30 trillion, roughly, a little over 30 trillion in December 2021, 30.5 trillion. Now we're down to 27 trillion. Of course, that's a decrease, but we've had these little, it's definitely on the uptrend, right? Like I said, driven by the rest of the world, but it's still quite a bit higher than pre-silly season, pre-global hysteria, where we were about 20 trillion. All right, and this is how it looks. This top five, usually it's 80-20 rule. Okay, so the top 5 out of 50 is what I'm calculating here. So even more extreme than the 80-20 rule, so to speak. If you looked at number, not percentage value, that's 80-20. But in number, that's 5 divided by 50. That's the top 10%, actually, in number of central banks make up this core component, this 80% in value of the money supply. So we'll say that again. The top 10% of central banks in number, that is the top 5, make up the top 80% of the value of the global monetary base. Okay, rest of the world is here. This doesn't necessarily predict a crisis, or it doesn't necessarily predict where the economy is going to go. I've said this many times. If you just look at the monetary base before the global financial crisis, yes, it's rising. It was rising fast, but the dollar monetary base wasn't even rising that fast at all. There's the dollar. Just, Federal Reserve in total increases their balance sheet by they were increasing it by about a 6.7% annual increase. Doesn't necessarily predict the crisis, but the reaction after the crisis of 2008 was massive. What they called quantitative easing or money printing. Same thing happened in 2020, 2021. The rest of the world is pretty lax, low interest rates at the moment, around the 2 to 3%. The U.S., and I guess the UK, I should actually pull up TradingView to get these interest rates to give you an accurate account, but they're, obviously the outliers at 4 to 5% in the low short-term rates. But nonetheless, you can really see that in the money supply here. You see how the dollar it's elevated. It's not, it's not necessarily going down. But it's not really going up. It's been pretty flat, basically, since 2021 December is 6.4 trillion, and now it's 5.75 trillion, so flat to down a little bit. There is this other very noisy account called the reverse repurchase facility, which is the Federal Reserve really made this a very active thing in 2020 and until today. That makes up the majority of the rest of their balance sheet, right? At this point, they almost got to 9 trillion. I'm talking about the Federal Reserve now, just the Federal Reserve. They almost got to 9 trillion in value. But you see the monetary base was only 6.4. So what was the difference? Primarily this reverse repurchase facility, which is basically base money for non-banks. This is all base money for banks, but the Federal Reserve, as they do, likes to experiment and bail out other people. So they increased basically the liquid reserves for money market funds, hedge funds, other institutions that were afraid to participate in the broader money markets. They extended this reverse repo facility, and that's there. But that's actually not a traditional base money metric. You traditionally look at the banking system for base money. So the system continues to get more sort of squirrely. And I just need to show different metrics to show you that. Like, one thing I haven't, or I don't have like fully at my disposal, but I'll quickly get it in the next month or two, is just to show you like this same curve, but look at the total asset value of each central bank, because that will show you all of these other things like reverse repurchase facilities. This is still far and away the core. This is the main monetary metric. It's the most comparable fiat money supply with Bitcoin. If we look at the change in the growth rate, we'll look at the Bitcoin price in a second. I don't want to lecture too much today, too, so let me know if you guys have questions here. Here's until June. Two different things. Okay, let's take off Bitcoin. I've shown this many times, but again, before 2008, things look pretty, they're not perfectly regular and scientific and mechanical and machine-like, but they more or less dance around this 12.7% number. Okay, so that's my highlight number for sort of the native weighted average units upon units of each central bank per year. Works out to 12.7%. Okay, it can be below that, like it was here in 1981, and then above it in 1983. You see your Y2K, big pumping of the money supplies. People got scared of the Y2K bug, which wasn't really a bug. A lot of libertarians got overheated, sold a lot of newsletters. Gary North is no longer with us, buried a tractor. He's also a pretty racist fellow. A lot of newsletters get sold in times of crisis. But we're very lucky because we have Bitcoin from this moment. And you can use your eyes and see that this is a more volatile money supply chart from 2008. Right? And indeed, they were really cooling off the liquidity here just before the GFC, globally. And then they had to really throw the gas on with all the quantitative easing post GFC. And then you get to these numbers of, 30, 40% annual increase. Good morning, Daniel. Hope you're well. So yeah, QE 1, 2, 3 is basically here. All right. But this is a global figure. This is not just the United States. And then they realized, okay, we got to start cooling down. So globally, they literally go to an almost flat change in the money supply. Okay. I'll go back to this just to see, this is a dollar. It's hard to grasp what you're looking at sometimes because this is a dollar-based chart. This is sort of the best I can give you in native unit chart. Okay, so it's coming way down, actually, the money supply printing here on a trailing 12-month basis. And that is, actually, it's more or less reflected in the dollars here, but it won't be exactly this number if, say, you took this March 2018 number and then went to the 2020 February number. Right, so it's 21.62 trillion, 20.44 trillion, whatever that slight drop in percentage is. I don't know. It's going to be different than here, but you get the same idea because one is a dollar-based chart, so our units are. We have the dollar fluctuation in each currency's dollar relative value to contend with. And here I tried to remove that. It's still there a little bit, but I tried to remove that by looking at each month, weighting the basket, seeing how each currency goes in its native currency. Point is, obviously it's a way extreme move that they did here before the old crazy days of the pandemic, and then shot it right back again to almost all-time highs in trailing 12-month terms. And then relatively flat for the last 4 years. 3.5 years. So you just use your eyes and you can see from, say, this period, which I'm highlighting, has been way more volatile as far as what central banks do compared to this period. Interesting. Now, let's look at Bitcoin. Let's layer in the trailing 12-month. Remember, this is the sort of my canonical money supply that compares with Bitcoin. So the best way to compare Bitcoin with this is what are the changes in the market cap or the change of the Bitcoin system. We could do price as well for Bitcoin. It's similar, but since these are stocks, let's look at the stock of Bitcoin in market cap terms. Okay, so here's Bitcoin. Bitcoin is on the right side axis. Base money, fiat money is on the left side. Let's take off this. They don't overlap, actually. I've probably contradicted myself with that statement over the years, or over the years showing this chart. They kind of overlap here, right? In the meme stock crazy era, right? Bitcoin pumped, fiat money pumped. Also, Bitcoin went down, fiat money went down. But other than that, we see Bitcoin's pumping again, the 4-year cycle. Fiat money is not pumping. It could soon, but it's not right now. Also, the early days of Bitcoin, right? Like the 2011s, 2014s, Bitcoin would pumped again the 2017 cycle. Fiat money was coming down from large pumps there. So this goes to my overall thesis that the economy, as all the newsletters talk about, all the news shows, it's less important to Bitcoin's price action than people believe, than people say. I think empirically it's less important. You just look at this and see, all right, Bitcoin can pump like its usual 4-year cycle right here, coming into 2025. It's true, it looks like it's kind of running out of steam here. It's true. It's a little bit different than, say, this cycle or this cycle. And this cycle was early. So things are changing. But it's still way different than what the rest of the central banks were doing. So again, it's just some caution. It's also, in my view, optimism. Actually, Bitcoin remains sort of uncorrelated. And most of it has to do with the power curve, in my opinion. So let's do a trend line then on this. You see here that it's a gently sloping down rate of increase. Okay, so we go from, let's take off this. Let's take off base money. So we started up pretty high on a curve, 150% per year. It'd be the same for price, basically. It's slightly different because this is market cap. So remember, price right now is about 42% year on year, and what I'm getting for Bitcoin is 40. What I'm getting for Bitcoin's market cap changes on a curve. We're at this 48% year on year increase. But you see it's coming down. It's clearly coming down on a trend. So it's different than what fiat money does. Fiat money is exponential. It's consistently hovering around this 12.7%. Although it's like insanely volatile around this 12.7% in the last 15 years, 20 years. So it's going to be exciting. It's going to be exciting. There will come a time where this chart probably will line up much closer to the Bitcoin changes in market cap, but I don't see it yet. So that's my thesis. That's really my thesis. We have a little bit of time. Fedwire, as I've talked about, is still enormous. 1.1 quadrillion. Yeah, 1.1 quadrillion dollars a year in turnover through Fedwire. Bitcoin does $7 trillion in turnover in the system. So we have some time. And they're also just, it's not the main story. The main story, the cool part of the story is Oops. Our power curve. So here, have this. Shown this many times. 100th percentile, 0th percentile is not going to happen again. It gives us this curve. And, you know, again, how many newsletters are going to be sold? For the fear of Bitcoin, the pumps, the dumps, we're somewhere at fair value. Could we fall back down to very risky, or not risky, but unhappy levels, like the 50th percentile or the 40th percentile before we go up again? Maybe. But so far, the four-year scheme seems to be working out. Still above it. Oh no, did we fall below it actually today on the number? Was it this 25th? Ah, when I pulled it into the model, we just fell below it. There you see. Let's take it all off so you see what I'm looking at exactly. Oops. Price and the curve. So we did just fall below it. I was pretty optimistic all days that I've been talking so far because we've still been above the curve. Okay, so we just fell below my curve today as I pull in this data by $100. It's not the end of the world. We're still in my view, a very bullish time because every time this price is above the curve, we pull the curve up. I say it again and again, but I just want to repeat it for new listeners or people that haven't seen this before. Like, this is all a great sign that we're pulling the curve up. If we close today under, we'll pull the curve slightly back down. But that's how it is. It's the 60th and the 70th percentile, the ones that straddle the curve, right? Another reason why I draw this is the all-time curve. And this is kind of how the curve looked at the time, kind of on a tangent. It's not the right word, but as it was evolving, right? So what you see is here, again, as we move up with higher and higher prices, the curve gets pulled up. That's what you see with the dotted lines. The curve, the power curve is getting pulled up. And then as we fall back down with lower prices, the curve gets pulled back down. That's where we are today. So we are at something like the average, which is not actually the average. I probably should put that on there too, but it's too many numbers to show. We're on trend. Okay, so on trend means 2/3 of the time. Something between the 60th and the 70th percentile of all observations. Right on trend. You know, you can watch a lot of fear porn on Twitter, or you can be stoic, like Stephen Paranoid says, money or debt. Okay, so I wanted to go back now to market cap trends because I talk about this chart a lot too, and I realized I need to give a few more disclaimers. So everything in the TradFi world is exponential. Absolutely everything. Stocks, bonds, gold, everything is exponential. So if you plot out the growth rates, they will look like this. A straight line actually a straight line growth rates like this. And then if you put it on log scale, the growth, it will turn into a straight line. So I'll show you here. Got to put them all on. Oh, no, it is already on log. Sorry. Let's take them all off then and just do, no, here. Here's my base money curve. This is this. This is this curve, $27 trillion. Okay. At the moment, there you see it, 27 trillion. Okay. This is my second quarter number. We're actually well below trend. All right. So not to clutter the chart, I sort of just have trend and then the reality, the facts, and then the trend. So you see we're way below trend. Trend is 34 trillion. since 2008. Since 2008, okay, it's just what I'm picking is basically the lifetime of Bitcoin is the trend for all this stuff. Could change. Maybe we stay lower. I doubt it, but maybe we stay lower in the money supply than we have been. We project this out, and this is the most comparable money supply with Bitcoin. Okay, so when will Bitcoin pass fiat money? Let's do Bitcoin again. Now we can see the exponential curve, because it's still a straight line, but it's like a smoother, it's a shallower straight line, shallower growth. Then Bitcoin has that nice power, sustainable growth. So when we pass it, base money alone, not including gold, about 115 trillion. Hello, put call ratio. Thank you for the, by your thumbnail, you look hardcore in the trading, which is good. It's fine. Definitely more hardcore than me. The trend is going to be 125K by the year end, so I think that's it's totally fine. Do you have any thoughts about? Again, I don't have thoughts about the timing as much, but since we've had major bulls at these 4-year cycles, and the end of 2025 will be the actual 4-year cycle. Do you think it could extend up like this? I'm a caveman with that stuff. I don't do technical analysis. I'm curious if you think it happened in 2013, happened in 2017. It was early in 2021, way early, like 6 months early, and this was kind of a fake top. Let me know. But anyway, back to the just sort of analyzing the growth of this stuff. On a curve, a couple things to say. Back to this. So on a curve, the base money of the world in dollar terms grows at 8.2% from 2008. From 2008. It's an important distinction. If you go further, like back to the 70s, it would be closer to 10%. But notice, back to this chart, I told you it was 12%. Right? So this is where numbers get a little bit finicky. Basically, this has less to do with dollar appreciation or depreciation of other currencies. This has more to do with dollar appreciation of other currencies. This trend line is only measured in the dollar slope. So this actually shows that, if you believe my numbers, sort of the most natural native growth of the world-based money supply is 12.7% since the 70s. It's true I don't have it since 2008 in this chart. It would be different. It'd be lower, actually, because you see we spent most of the time well below this number. But anyway, let's just for the sake of this example, say that 12.7% is the number. It's actually closer to 10.5%, but anyway. If it's 12.7%, and then you see this curve on the measuring just the dollar value only grows at 8.2%, that would show that fiat currencies actually lose something like 4% on the exchange rate versus the money that they print. All right, so that's how you would interpret this. And it's, like I said, this is since the 70s number. I think from memory, this line, if you measured it only from, I don't actually remember what it would be from 2008. I don't remember it. But I do think if you compared this 12.7% with the trend line growth in dollar terms since the 70s, it would be maybe 10.5%. So the delta is 2%. Basically, central banks lose 2% constantly in their money versus the dollar. Dollar's still king. So anyway, that's one thing I wanted to sort of point out, because people, sometimes you see different numbers, and there's a lot of different numbers in my exhibits, but I try to at least explain them. So anyway, if we believe this curve, 8.2% per year, we're already below it, well below it. Maybe we'll jump back on it. And so far, Bitcoin is on track to pass it in 15 years. Okay. The other one is gold. Let's look at gold individually. Gold is going gangbusters. Here we can see gold is, unlike base money, well over trend, right? Because gold's moved basically sideways since 2008. Look at that. We're $7 trillion over trend, which is hilarious. The market cap trend of gold is only 6.3% since 2008. So Peter Schiff is yearning for a higher trend line. Maybe he'll get it. Maybe he won't. I have no idea. But this is trend line growth of the gold market cap since 2008, 6.3% per year. Bitcoin will pass this obviously sooner than fiat money. Projected here, 8 years. Hello, Jimmy. I'm not sure. I don't think so. Velocity, even economists sort of confuse the definition of velocity. My understanding of velocity would be how much those bank reserves are turning over, and that's not necessarily decreasing. So let me just show you guys to remind you. Oh, this is the Fedwire chart, right? So you can measure velocity as a lot of ways. Some people would say it's just GDP divided by the monetary base. Then you get a number that's like 4 or something. Because it's 20 trillion roughly. It's more than 20 trillion, actually. It's whatever it is, 25 trillion divided by 5 trillion monetary base. The velocity is 5. But that's really kind of academic and not that good. So hold on, let me show you in a second. I'm pulling it up in the Fedwire chart to answer your question. It takes a long time. Here it comes. Here it comes. So here's the Fedwire chart. You know, this is velocity of money, in my opinion. Okay, it's not velocity. It's the volume, but still this volume is like increasing and the monetary base is increasing. I need to do a velocity chart, you're right. But this would be, you know, take this 1,100 trillion divided by, let's even just say the monetary base, which is 5.5 trillion. So 1150 divided by 5.5. The velocity is 209. How that has changed over time, I think higher. So my definition of velocity would be this, would be how much Fedwire has turned over in a year divided by the monetary base at any time. And it's actually not just the monetary base, it's even a lower number than that. It's just the bank reserves, because physical cash doesn't go through Fedwire. So you got to parse through the numbers a little bit. But I would say no. I would say to your answer, the Fedwire is still kicking. The dollar is dominant. As far as I can see, velocity is not declining. But it's a good point. I will get the chart together where we actually look at the velocity of Fedwire. And I should get the other, you know, I should at least get the ECB's clear, whatever it's called, like T2 or something. Chaps is the UK one. I'll try to get more to show, because that's interesting. This is another good reason why I think, you know, if Bitcoin is less than 1% of this chart, then you can be pretty sure that Bitcoin price moves have very little to do with the broader economy. A lot of people have a hard time swallowing that, but I think it's just Bitcoin is way more contingent upon the curve itself, on the power curve itself, the adoption itself, which should give you comfort that this is the sound money that people like, and it just takes a lot of time to get adopted. Anyway, what was I saying? Okay, so back to this chart about looking at the trends. So gold is easier. We'll pass gold easier. Let's look at the growth of the United States federal debt. All right, so here's debt. This is an amazing trend. 98% R squared since Bitcoin's been alive. All right. Federal debt was 10 trillion. The American federal debt was 10.7 trillion in December 2008. Now, which is the trend start? I can't even remember with my, when does gold start? Okay, I actually have this extending. It's not just quarter end, but data available through July. So, stick with gold. The U.S. federal debt July close was almost 30. Actually, we did pass 37 trillion. I think I saw in the last couple of days. So you're 3.7x higher than you were in 2008. That is a compound growth rate of 7.4%, basically doubling every 10 years. That's an exponential trend. That is a trend. How many newsletters have you all read? I've read a lot over the last 15 years that say the dollar is going to zero, the world's going to end. Buy gold. I'm not defending them. I'm not defending them when I say things like that. I'm just saying, let's base our assumptions in reality here. How fast can Bitcoin pass this? Pretty fast. Looks like it'll be close to base money. Yeah, it's actually almost identical, interestingly. That's a coincidence. It's not true that the U.S. Treasury is back everything else in the world, but it's actually pretty close. It's almost identical. So right around 2041, okay? Both U.S. Treasuries and world-based money. All right, now I want to talk about broad money. So broad money is here. No, here. I don't have the full world here, or at least the top 50 currencies. I only have 5. So you have to extend this about 20%, take it to 140 trillion or so, give or take. This is the growth of broad money. So broad money is not at all comparable to Bitcoin. It's just not at all. This includes your bank accounts, time deposit accounts, money market funds, repos, savings accounts. It's all in here. The broad money supplies. It's huge. 116 trillion. Let's call it 140 trillion. Remember, base money, which is comparable to Bitcoin, is only 27 trillion. Nonetheless, let's have fun and see when it could pass broad money. Okay. And this broad money is this chart, and it's low. So keep in mind, I don't have it fully fleshed out for you. It should be like 140, this number. It's still going to grow at the same trend, probably. Close to 6% a year. But anyway, Bitcoin could set to pass this in 2050 already. But this is another little caveat I wanted to tell you guys, because I talk about this stuff a lot, and sometimes I just roll through these charts. It's my belief, pretty firm belief, that Bitcoin will never pass this line, because broad money is not comparable to Bitcoin. Broad money would include, this is where we get philosophical, right? Like, do bank accounts still exist in 50 years or 30 years? Do we have debt? Do we have gift cards? You should throw even gift cards into this broad money supplies, right? Amazon gift cards, pretty big form of money, actually. I think the answer is going to be yes. So you're always going to have something on top of the layers to trade. And we could have things that we've never seen or heard before. It is interesting to say that, this, back to this chart with Bitcoin, this still includes a Bitcoin layer 2, which is Lightning, and whatever, liquid, all the rest. As long as it's pegged, those values are the same. They're theoretically always pegged 1-to-1. So we don't have, the only thing really in Bitcoin world that looks more like this world, which is bank accounts, would be exchanges that don't fully reserve, and most fully reserve. We'll see how long that lasts. Also, open interests of derivatives. So options are even coming on pretty strong now for Bitcoin. Futures have been around for many years. Open interest in Bitcoin futures contracts and Bitcoin options contracts are definitely pyramided on top of the value of Bitcoin. But so far, we don't have much broad money on top of Bitcoin. So we'll have to see. We'll have to see how it goes. But the point is, I wanted to mention this because I know I run through these different things a lot, and this is actually technically impossible that Bitcoin could pass this money supply, which is this money supply. Bitcoin purists might say everything's going to be Bitcoin, everything else is a scam. Maybe, but it's just logically, fundamentally, you can't have the base, which is here, be bigger than deposits, representations of the base on top of it. So let's put, and this is another problem with speculating, is even my growth rates, even my base money, which grows at 8.2% per year, right, grows faster than my broad money data. So it even passes here. So this is even wrong. This is an incorrect one. I just wanted to show you. This is the intricacies of projecting out really long term. This is for sure impossible. There's no way that base money would ever be bigger than broad money. So it's just the data that I have. You project out. This grows slower at only 5.4% per year. But I'll work on trying to make this data a little bit better. But again, it's an idiosyncrasy. It's probably better to take this projection off completely of my chart. But is what it is. This is the money supply that we should keep an eye on as far as where Bitcoin really is. Okay, so with those little disclaimers out of the way, what else did I want to show? I think that was actually it. Let me know if you guys want to go through something else. This is in gold. It's also very interesting. I've talked about this last week, but if you're a gold bug, if you listen to Peter Schiff for 10 years, 15 years, you technically have a buy-in opportunity still into Bitcoin. This is Bitcoin priced in gold in ounces. So these numbers you see in the tooltip are ounces. Actually, I thought I would have ounces in the tooltip, but it doesn't show up. So the price is, quote, only 33 ounces of gold for one Bitcoin at the moment. The all-time high looked like it was here, 37, 40 at the end of last year. And if you look at these bands, quite low. My buddy APSK, I talked about him last week, but it's worth revisiting. He talks about how if you really run the numbers through the cycles with gold, it looks like we haven't even had a cycle at all, a fourth cycle at all in terms of gold. Where is his thing? There we go. He's a great follow if you don't follow him. So here's Bitcoin priced in gold this cycle. Pretty wildly low. But I think what this does demonstrate is what I say all the time, is we got to think about where the puck is moving. And there's still a lot of people that like gold. So we got some time. Trend is our friend. It's also it's not incorrect to say that when the money printing starts, I'm sure that in some sense Bitcoin will get a tailwind, right? But look here. I mean, it really didn't need money printing at all as far as the central bank money, and it was growing pretty fast this last cycle. Good morning, Ansi. Yeah, they definitely are. They definitely are, and they have been since 2008. Russia, stupid Russia, is the only one that's had to sell some of their gold because they have no reserves. But um, China's been buying gold since 2008, pretty hardcore, and so it's still an asset that they know has universal value, so they don't want to sell it. But yeah, I think they're for sure all buying Bitcoin as well. They just don't know how to publish it or think about it. They don't want to. They don't want the price to go up while they buy. It's pretty much the simple thing. I think the U.S. is trying to figure out how to do that as well. I saw some conspiracies. People are thinking that maybe they're going to take Saylor's Bitcoin. All right, they might not phrase it that way, but they'll sort of add his Bitcoin to the strategic reserve of the United States or whatever. I don't know. No one can predict this stuff. If that happens, it'll be massively challenged in court, and fiduciary rights of shareholders will be challenged. The best thing is to be in the game. And we're super lucky. I just want to keep reiterating that we're super lucky that we have this asset, which can sort of act as an escape hatch from all the other monetary assets. And also, again, if you look at these curves, this is 4 times higher on this axis, okay? 4 times higher, this green line. But we're just falling below being 4 times better as far as the growth rate. If printing fiat money is better, of course, we know it's not a good thing, but you better at least grow your balance sheet by 10, 12% per year is the point of this chart. So we're just under 4 times better now than the fiat system. And probably the real fireworks will happen when these start to converge. And even sooner. They won't fully converge till probably the year 2070. 2070 is about when this green line will fall to 10%. Right? And of course, this line is going to keep stepping up. I talked about this in Finland, in Riga. A super exponential growth. So this line will get a little bit higher every epoch. Even though you can run a trend line over the whole thing and see that it's here. It eventually is going to get even higher because they might have these like crazy downdrafts, but then they'll have these crazy upswings that pull it up like way high. So now we're super lucky, guys. Super lucky to have Bitcoin. What do you guys think? When is it going to pass? I think 15 years at a minimum. But if you think about all the fireworks that we've had in the financial system over the last 15 years since the global financial crisis, since 2009. I made this observation, which is not only my observation. I mean, Jeffrey West talks about it in his book Scale. We're moving on faster and faster time frames. So let's say they even kick the can down the road of all this current system for another 5 years. I have no idea about that number. I'm just saying it. And then things get so insane that they'll I don't know. It's hard to even predict what could happen. I don't want to say things like war because we're having a pretty dangerous time in the world right now, but it's clear that sometime before this number, in my view, Bitcoin's going to become like a global reserve asset and eventually base money itself. So here we say 15 years, a little bit longer than 15 years, but I think it's probably more likely going to be 10 by 2035. Where do my percentiles go? I think I need to extend this out. Yeah, this only goes to 2033. Probably need to extend this out for you. 1.1 million by 2033. And the fun one, actually, is to show how consistent this curve has been by showing you, which I don't have yet. I keep talking about it, but to build a chart that will show you the progression of this value, that 559,000. Because that 559,000 projected back in the day would be way higher, right? It's come down. But probably since 2016, I could show you a chart of like where 559,000 sits coming to here, right? And it's just going to be a very consistent number, which is cool. Better to draw the chart than talk about drawing charts. Again, this is why I'm an inflationist. I believe in the mechanics of inflation. I don't think there's a lot of these deflationists who have been writing newsletters for years and none of that's been close. I mean, there's no way that they're going to let the money supply shrink to deflate prices. You just look at any point in this history and it grows massively. And this isn't even a strong growth rate. This is, by the way, this is this again. Sorry. This is the broad money curve. Grows pretty shallow, right? At least from the data that I have, 5.4% per year. So pretty. And again, this is not the total. This is only the top 5 currencies. You know, we're guaranteed the money print, basically. Good morning, Anders. Doing well. Thank you very much. Only streaming a couple days this week as we close out the summer. But doing very well. It's already cold here. Got to get to Italy. Haven't made it to Italy yet this summer. Usually we try to go at least once. That's most of what I had today, guys. Let me know if you have anything else. I think we powered through some good ones. Don't panic. Where's the chart? Where's the don't panic chart? Let's comment here. Cast Steve. Financial systems tend towards entropy. Bitcoin is anti-entropy or negentropic. Brings information order amongst other things. Yeah, well put. I'm fine with that. Universe tends to disaggregate, get more random. Not Bitcoin, though. Good morning, Satoto. Good morning. Okay, so beyond the gold, which is actually still, I'd say, pretty bullish in terms of Bitcoin, because I just don't believe that the gold rock is going to somehow overtake Bitcoin. So again, I think you got a deal if you hold gold ounces and you want to go into Bitcoin. Still pretty cheap. Anyway, what did I want to show? This chart, again, my go-to power chart. It's still a message of don't panic. All right, we're right on trend. We're clearly in an uptrend. Peter Zion was wrong. A lot of these guys, from the power curve crew, I'll put another APSK chart up. I need to copy some of their charts because they're really so good as far as keeping the cycles in perspective. But this one is also really great. Okay, so he drew this on August 20th, which was only 5 days ago. But, basically max and mins of the prior cycles. Here's the 2021 came early. But most of the cycles top here, right? Oh, wait. Yeah, no, that's right. Yeah, end of 2025. Just looking at his axis. So exactly how he's breaking up his 4-year axis, I presume it's right around the halving. Is that right? Yeah, it's the halving, close to the halving. And this makes my numbers seem a little bit bullish, right? Because I told you, I think 3x the trend, which is 125, 375K could be in play. This looks like it's not in play at all. Who knows? But this is just another great way to overlay it. I got to get this chart on my engine. Some people really think the cycles are over. We just sort of continue up on this path. It's possible. But let's decide that after 6 to 9 months. We haven't passed the full 4-year cycle yet. He also puts the power curve as support. I think he just takes 0.05 times the curve. I think that's what he does. You could do it many different ways. You don't have to do the trend line analysis like I do. The percentile analysis on the multiple. You could do it many different ways. Anyway, I think it's a really good one. I think it's a good don't panic chart. And I probably need to replicate it. China's a monster money printer too, aren't they? Look at that. The size of, they only report up to M2. Again, remember, M2 is just retail, extra retail type deposits. You got to look at M3, which is institutional type deposits, to get a full money supply picture. It's monster growth. Of course, it's a communist society. Like, there's a few banks, all state controlled, but a monster money supply. $45 trillion equivalent, larger than America's. Of course, the American one, which I don't have, I always say, what I do not have, and this is my M3. You won't find this on the Federal Reserve site because they stopped publishing it in 2006. But all the components are still there. You just got to work through them, except for Eurodollars. They do not have a handle on Eurodollars. So it's possible that Eurodollars, offshore dollars, could be another 10 trillion at least. So bottom line for this thesis, No doubt they're going to continue to print over the long term. That's true. A little bit, actually really shallow on a curve, right? Remember the curve is over 30 trillion here. 34 trillion is the actual trend line of base money growth. So we're way underneath trend. But even if we weren't under trend, if we were on trend or even over trend, I still believe 95% of what Bitcoin does is this. It is precisely the curve itself that we should like take comfort in. 96% R squared fits it great. You know, read all the newsletters you want. I'm sticking with video, but there's a lot of fear that comes out in a lot of those, and hopefully we can not be such a fearful society in the future with Bitcoin. All right, guys, that's all I can do today. I'll see you again tomorrow. Everybody have a great week. Thanks for watching.